Hi there, Sean here from Mortgage Architects. So when we get to the point of signing mortgage documents, one thing that you will notice is that we are mandated to offer mortgage insurance. So mortgage insurance is not your standard life insurance that you might get through your company or independently, like term or whole life. It's also not fire insurance. Some people get the different insurances mixed up, and it's also not the government insurance that you would pay if you're putting less than 20% down on the purchase of a property. What we're talking about is mortgage, life, and disability insurance. So when you sign up for a mortgage, we will offer you, and it's completely optional, we will offer you mortgage, life, and disability insurance. So what happens is with the mortgage insurance, it kicks in the case of life. If God forbid something happens to you, the mortgage life insurance will pay off your the balance on your mortgage. Usually we'll recommend that kind of insurance if you're not sufficiently insured. And by not sufficiently insured, it means that you don't have enough insurance to cover the balance of your mortgage through other means. So again, if we're talking about life insurance through work, it might be 1 times your salary. Okay, so let's say that's 60,000, 80,000, 100,000 or more. It's probably not enough to cover your entire balance on your mortgage. Okay, so what you have to ask yourself when this is presented to you is mortgage life insurance necessary, and is it right for me? And the answer depends largely on what will happen if you pass away. If you're single and you're living in the home alone, and your plan is, if you pass away, the beneficiary of your or the benefactor of your will is going to or the executor of your will is just going to sell the home and then take the proceeds and divvy it out to your siblings or your parents or whatever it may be. There's no real problem and probably no big need for insurance. Now, if you introduce a wife or a husband and kids and you're the main breadwinner or otherwise, now people are depending on living there, and you really need to think about making sure you're covered. Okay, the insurance that we offer, again, it's completely optional, but we are mandated to offer it to you. If you take it, you can cancel anytime. So what I always recommend is, if you're not in a position where you are covered at the moment that you sign the documents, my recommendation is to accept it and then go do your homework. And if you want to keep it, you can keep it. If not, you can cancel it, and you have another plan in place so that you're protected. You and your family are protected. Okay. I also mentioned disability insurance. It's part of the same offer. And for the disability, what it will do is it will cover your mortgage payments for you for up to 2 years. It depends on the policy. After which time, presumably you've healed, or you go on long-term disability through the government or through your work or whatever it may be. But it's definitely something that you should think about and talk to your broker about, or the bank, when they do offer that to you, just to make sure that you have a plan in place in case something happens.